in May for Mogul. And so
around a fern.
We brought back the fern, much to our office manager's chagrin. And this is not our fern, mind you, but still, welcome to this week's episode. How are we doing? How you doing, Jay?
I'm feeling good. How about yourself?
Frazzled. I mean, yeah, frazzled.
What's
Frazzled. Let's get into it. No, frazzled because, let's see. I mean, right off the bat, I spent an hour on the phone with DC Realtors.
Tell me about it.
So, I mean, let's talk about realtors because that's become a main common thread throughout the Wall Street Journal based on the commission. What?
And also a sensitive topic. A lot of my realtor friends are like very butthurt about the commission. Cuts, understandably.
I mean, yeah. Like, yeah, it's
across the board.
Yeah,
it's pretty wild.
But I spent to get a realtor's license. Not only did I have to go through, and keep in mind, this is my second time.
Congrats, by the way.
Oh, thank you.
Thank you. If you all need a DC realtor, come to this man first.
Easy plug. I won't charge the 3%. Don't worry. But had to get on with DC Realtors Commission. Applied last week.
Yeah.
Then got on this week to ask where my application status was. Turns out it wasn't filled, even though it was submitted. And then on top of that, there were like a million other forms.
Yeah.
Long story short, it was worse than the DMV. Yeah. I didn't think it could actually happen, but it is. But with that, enough griping. Let's jump into it. It's a happy Friday. We've got Tinder for real estate. So we will be going through a few different topics here and tying it back a little bit to real estate, but also how it relates to you, your investing sentiment, and the go forward macro economy. So
100%. Before we jump in too, just want to give everyone an update.
Yes.
You probably already saw the email, but we have all 3 of the properties on the platform with live vacation rental listings on Airbnb. The team in Awning did an incredible job in addition to our partner over at Showplace that helped us set all of them up. So shout out to them. I think they were looking incredible. I think if you could ever check them out, we're going to be running a special promotion next week, so stay tuned for that. But in the meantime, the listings are live. Great. If you've already invested, congrats on your live listings. If not, go check them out. Go invest today on the site and book some listings if you're around the Houston, Dallas, or the Empire area, California.
Yeah, and that's mogul.club. Subscribe, obviously, to our YouTube channel, LinkedIn to get more updates. But they are live. Dividends coming out for the Roman next week, which is great. The Logan and the Kendall will be coming out shortly thereafter as they just went live. But already they are off to the races. I believe we had our first
bookings. We did.
Very
exciting. Within the first 24 hours, they haven't even thrown any marketing efforts. It's a very exciting stuff. And we will start doing some property reports as well. We're seeing some formal property reports. And then with that work.
Yes. So, and with that also the property reports, things are going on behind the scenes. We're constantly on the phone with property managers, with the Airbnb listing. I mean, so everything is moving. And even when it's not moving, and even when you're not seeing dividends in your account, it's still appreciating value. I mean, all of them have appreciated significantly in value since we last purchased them. Not to mention this upcoming year, what's going to be happening there. It's going to be absolutely ridiculous. So outside of that, and then mark to market on those assets, marking them at the valuation that we get at. That'll be coming out in the next little bit. The selling out of these properties, which a lot of them are kind of on their way, if not there already.
Yeah.
So with that, I can set up the Tinder for real estate. Obviously, beautiful slideshow.
So walk us through how this is going to work.
So this is going to work. We're going to hop on. We're going to talk about individual topics that we chose that are kind of going on and have large ramifications for you as a consumer on your investing strategy, on your real estate investing strategy. And so with that, we picked a few that we're just going to kind of go over overviews and decide what we swipe right or left on. And swipe right or left, by the way, we could be classifying. You'll but and get ready for the first topic. So TikTok USB. You want that?
Yeah.
I got it. I got it. So as someone that doesn't use TikTok,
I never wanted to do it. So it's probably hard to believe, but I'm very curious.
No, why would I create an account? Like I don't want
Most people do. I feel like most people to post that.
no, but I mean,
Never signed up.
but I don't want everyone having. I mean, granted, every single platform out there has all our data, so it doesn't matter from that perspective. But the TikTok ban on the U.S. First of all, I've been following this story for a little bit, and all the way back to when it was first getting covered a few years ago, when it first came online, so to speak, when the Mega sisters, their dad was like, you know what? I'm such a good businessman. I'm going to try and buy the U.S. entity of TikTok. But outside of that, we can go over a quick overview. U.S. House of Representatives just tried to pass a bill that is going to ban the U.S. entity of TikTok if it is not sold by its Chinese parent company within the next 6 months. That vote was just passed this past March. It was passed through a vote of 352 to 65. Absolutely ridiculous, not incredible. And now it goes on to the Senate, where we'll see if it actually goes through or not. But with that, 150 million American users to date. I mean, it's addictive for a reason. I just found out that Thomas actually disclosed to me that it's a better search algorithm than Google. So if you were to like look up, I don't know, houses in the DMV area, or like what should I do with my interest-bearing savings account, you could actually get a load of suggestions that are short TikTok videos. Granted, none of it's vetted, but is Google really vetted? I don't know. I don't think so.
I personally think crowdfunding data is almost just as important as obviously third party review data. Think about platforms or Reddit, like you can actually buy some incredible like, through experiences. Like for example, if someone was going through their DC license application and looked only on official pages, they probably would find any information about having to submit. So you should be certain points of the platform, right? But if you started a thread on one of these crowdsourced data platforms, I'm sure you'd be helping a ton of people with accurate information, right?
I mean, I definitely would have a little bit more accurate than that. But yeah, no, I mean, where to buy white sneakers. I've gone to Reddit for that. Shout out to my roommate senior year for actually walking me through that one. But there's a strict Reddit out there with 10 options for white sneakers, whether you go on the Fergie route or go on the Fuji route. Yeah, they all look the exact same. I mean, each one is just different price points. Yeah. But anyway, so this really comes at a time too when the financial literacy wave has been hitting the nation. A lot of people are saying that the next generation is more financially literate. We'll get more on that in a second. But the idea being that TikTok, even though it is these shitty little dances that happen every now and again, there are also opportunities on there to learn much on that crowdsourced data. Right. And so it is unfortunate that when consumer information like this, when it's talking about why to invest in real estate, what you should do with your 401k, what you should do with your interest-bearing savings account, where you should allocate it, how you should use Mogul, that's savings account. And with that, I mean, if we were to do away with that, in my opinion, that's a ridiculous notion to even think that can just go away. I would say there are a lot of get-rich-quick schemes on there, a lot of people talking big talk about these 6 quick hacks on how to make a million. It's not that easy. Right. But if people aren't going to go to the books, which you can make an argument that if they got rid of TikTok, maybe they'd go to the books. If people aren't going to go to the books, then this is the easiest way for people to learn about financial literacy, to become completely financially literate. So, I mean, even though it pains me, and even though there's all this talk about, obviously, the data that we're passing along and the misinformation that could come about for even meddling in elections on the upcoming election cycle, mixed with the fact that AI and generative AI potentially do deep things on TikTok, spread misinformation, rampant misinformation. I mean, there are a lot of benefits to it.
Oh, definitely. Yeah.
But I mean, that's Facebook.
Yeah, no, I agree. Like, we could go all day about like associated with general social media. There's a lot that comes from it, even if some of the information is accurate financial literacy, at least some of it's like inspirational too. Right? And you have that chance to like dive into real estate or anything else, like it might inspire you at least like start thinking and then Like you can start deciphering right and what's not right. It really keep you up on your dream. I like looking at something online, but I definitely have.
No, I mean it makes something attainable.
Yeah,
when you
exactly.
see someone achieve it, you're like, oh man, that's actually a lot easier than I
Right.
thought.
I completely agree.
It's like a lot of the things that we do when we're trying to learn something new. It's like, where do we pull that thread to actually unravel and learn more?
Right.
Because the only way to learn is by doing, in my opinion,
Right.
at least I know people are book smart and
Yeah, I
whatnot.
agree.
But if you don't know where to pull the thread, you'll never know where to start, at least in today's society.
100%.
And so I think that TikTok is not a net positive, at least a net neutral on society. That being said, the data component that terrifies me to no degree. I would say, I would argue with selling off the subsidiary, US subsidiary, maybe not to the DeMayo's dad, but maybe to someone more capable. What? Is it D'Amelio?
I swear I don't know.
Don't fucking don't do this. That's such bullshit. You definitely are like, oh yeah, it's so yeah. No, absolutely not. I have no idea. DeMayo.
It's funny.
All right, let's go with that. So would you swipe right or would you swipe left on
the
TikTok?
ban, right? No, I don't. Everybody This is, are we questioning security of data versus freedom of information? It's very tough on that side.
Yeah, technically freedom of speech can be impaired by the fact that the data can be used as misinformation. So I mean, honestly, like if I were to swipe right, I'd swipe right on banning the US-based entity being owned by a Chinese subsidiary or a Chinese parent company. I would swipe right on passing it along to a US-based company being the parent company here. So I would swipe right on that. I would swipe left on just banning it entirely and finding some sort of solution because it's already out there. 150. I mean, granted, we're heading into an election cycle, so I'm going to play a little bit more role. I mean, do you remember like a year or two ago when Freebie, you know Freebie? You remember? Yeah. I mean, no one should, but like, you know, Jury Duty? You know the show Jury Duty? In Jury Duty, like, it obviously blew up like crazy, but because it was blowing up like crazy, the advertisers paid on Freebie weren't that reputable. And so they were just pouring money, TikTok was, into Republican TikTok. And it was one of the funniest things in the world because it was like a farmer talking about how he solved one of the crises at his farm by going on TikTok. But anyway, that's neither here nor there. I think it's great for information in terms of learning stuff and finding that thread. But so I would swipe right on keeping.
Okay. Yeah, I agree. I think I completely agree. Like, privacy, obviously, massive security, number one priority. But I think that there's so many potential external benefits that come from it. I would like the way that you're doing it, right? It's not just a total agree or disagree. There's elements that are really important and elements that we should probably change.
Agreed. All right. Next slide. Right. Samsung investment. You want to take this?
Perfect. Yeah. So this has definitely been covering headlines quite a bit lately. I think we increased the allocation of funds quite a bit. I think it started off around 13, increased to 22. Now it's totally around 44 million in terms of a nominal investment into this, essentially creating 700 sites of production in Texas. And so one of the things a really big focus lately is that targeting around 20% in terms of global production right now. Whereas back in like 1990, using the US was producing like 37% of chips, specifically these chips that are coming from these countries. Now it's closer to like 12%, at least back in 2020. So I think one of the things that's been focused is this US CHIPS Act says like 5 billion plus increments that essentially are aimed towards increasing US chip production, and this is going to be that's going to hopefully increase that in the US and really a lot of jobs and basically obviously a lot of real estate generation to value creation in Texas, in around Texas. So massive investment there. You'll see a lot of news on that coming out in the future, but really cool stuff. I think obviously, increasing US chip production is massive. I think there's definitely a huge need right now in the market. So I personally think it's a very good thing. But
I mean, the investment in Austin, it's going to be just outside of Austin where those factories are going to be made. I think think about what just happened to Silicon Valley. Everyone started rushing back. Well, 2020 happened. Everyone was like, Silicon Valley's dead. SF is dead. No one would ever want to move back there. But now it's alive and booming because of the AI boom that's happening out there. So if all of a sudden you're developing the chips for these AI companies, these AI companies are going to start moving headquarters, or at least like second headquarters out to Austin. And so the already booming city is going to start booming again. But I would caveat that with, obviously, we've seen Austin prices have taken a jump off since the past few years because people got really overhyped and really sold on this American dream of moving out to Austin. And so with that, I would say it's going to do a world of wonders for the dumping off of Austin real estate, and it'll do a world of wonders for the local economy over there. And not to mention, it will decrease our reliance on foreign chip makers and hopefully never result in, again, one of those semiconductor shortages. And so I'm going to swipe right. I would swipe right. If you see this profile on Tinder, I'm swiping right. I think it's a net positive. That's a hot investment. That's it. Oh, Samsung's so hard. All right.
I didn't know this was the picture you chose. Jeez.
So this flattering photo is with a near and dear person to the American consumer, SBF. So SBF and FTX, obviously they've been in the news a little bit more recently, and that's because the sentencing for SBF just happened. So he has 25 years he'll be in prison, and he owes 11 billion. He's been ordered to pay. I mean, obviously he'll never hit that, but I would say for those of you that read the Lewis book, what's his name, the Going Infinite, the Going Infinite book, you probably know a little bit more about the situation, but I can go high level into it. Real easy.
This is some knowledge.
So one of the most successful cryptocurrency firms at the time ballooned in value, was getting celebrity endorsements from Tom Brady, Gisele Bundchen, who else? Shaq, Larry David's being sued by them, Steph Curry, all of those. So at its peak, obviously it was riding high. And then it faced this run in the bank scenario where crypto prices, as is tradition, came crashing. And so when it did come crashing, everyone wanted their consumer funds back. And so they did not have enough liquidity to cover their consumer funds because they had actually taken those and spent them through Alameda Research, as well as a million other different things. I mean, one of the things that they actually bought was $2 million for a tungsten cube. You remember that whole thing? The dense, like a ton, whatever it was. So they had all these funds tied up in these ridiculous investments that they were using consumer funds for. And in a bull market, obviously no one would have known that they were using it. I mean, obviously you can track crypto on the side and people should have been looking into it a little bit more. But at the same time, they were using the consumer funds to basically do these ridiculous investments. One of which, by the way, was Anthropic, which was in the news recently because he took out an 8% stake, $500 million investment in Anthropic, which technically could actually pay back today, could pay back a lot of the consumers their funds.
That was the one that actually did well.
Yeah, just hit the lottery with that one. But so with that, obviously he had this massive hole in their balance sheet. And so with that, they basically faced this run on the bank scenario, had to collapse, had to shutter, had to go bankrupt. When they did that, they brought in the guy that did the Enron settlements, and he basically hired Sullivan and Cromwell. When that happened, there was a lot of collusion because Sullivan and Cromwell hired him with the expectation that he would then hire Sullivan and Cromwell to do the bankruptcy proceedings. And ultimately, I think they got like $100 million plus in just legal fees, etc. And so with that, I would say the FTX SBF, what would we swipe right or swipe left? The swipe right or swipe left, let's be very, very clear, because we're not swiping right on SBF, but I am swiping right on the fact that he was just sentenced to 25 years. It is ridiculous. I mean, he single-handedly, obviously there's a lot of distrust outside it, but he single-handedly, if you trace all those funds being where they were and bringing down of all those crypto funds, he single-handedly brought down crypto that year and there will never be trust again.
Not just that, I mean, very on the Black Swan and what happening around that time, but like just thinking back to what was happening on the market and the economy, as we were beginning our journey, like what a crazy time. Truly a wild time in the market. It's almost like it's truly one of those bad actor scenarios where someone quite literally ruin an experience for an entire population of one Zach.
Yeah. It's like if when they first made pizza, someone that tried it was lactose intolerant, and we never got pizza.
Sympathetic to all the lactose intolerant folks out there.
And we never got that pizza ever again. So just absolutely, I mean, swipe right on the
sentencing, on the penalties.
Yes, swipe left on just him and FTX as a whole.
Just like,
so, all right, next topic. Go for it.
Sweet. Yeah, well, lots of routes to election, that or personal opinions. But we'll talk about the facts. So recently, right, we saw a massive upswing in his net worth. Right, I think it was like close to like $5 billion a day. I don't know if anyone's had a chance to pick up that American Dream documentary on Netflix, but it seems like history never repeats itself. Right? Backers will essentially bail this man out of any situation he's in, no matter what his cap table looks like. It seems like he can just kind of bounce back with sheer belief from backers, right? I mean, what else would you value it as? I mean, his net sales were about $5 million, right, the past few years.
Since 2021.
Since 2021, yeah. And it was like a $50 million plus loss, and like, what are we raising these valuations on?
That's a tech multiple. Okay, I don't think you understand. That's 1,000 times forward-looking or backward-looking revenue on the past 2 years. 1,000 times $5 billion. Actually, it was an $8 billion that it was valued at. $5 billion just for his stake, which is wild.
And I think there was like about $450 million of outstanding debt, and only half of it had to be paid back. Is that right?
So that's with his court.
Right.
Yeah.
Right. And talk us through that. You're on it. You are the IB guy, background, and you were active in this active.
Oh yeah.
You know all about what happens around value literally generated by taking these public mix with partners. Talk us through one, maybe just a quick dynamic of how that works for a quick educational perspective, and then two, why the heck and how this thing is able to generate nearly $5 billion in net worth. More than that, right? That's
so right off the bat, we have to understand too what he needed this fund for, right? Because Trump needed about $500 million to go pay off New York State because he had overinflated his real estate.
Right.
And so if we look even to that, right, just looking solely at the overinflation of real estate, it's because he had appraisers value his real estate exorbitantly high.
Right.
Now, at the same time, he has unique pieces of real estate, Mar-a-Lago, Trump Towers, whatever it might be. And so even in the court rulings, they gave a wide range of what it could be. And it was between 80 to 250 mil for even the Mar-a-Lago compound. And so it's like real estate appraisals are pretty ridiculous when it comes to unique individual properties. But residential, obviously, you can have comparable property sales. You can have comparable just local cost estimates, all of that. And so when an appraiser comes through, they do 3 different variations: cost income approach, they did the sales comp approach, and then they did just a straight cost analysis.
Right.
And so for us, with a lot of the properties, So with us, with a lot of the properties that we offer, we seek to get way below that appraisal value.
Right.
How does this relate to Trump? Obviously, his appraisal values, he was overinflating basically to get higher leverage in place to basically go out and buy more real estate or use it for his own business deal. New York State found him guilty, sentenced him, or asked him to pay a roughly $500 million fine.
Yeah.
So he obviously is looking to appeal that. In the process of appealing it, he said there's no way, no lender wanted to give him those funds. And so he whittled it down to $175 million. Now, at the exact same time that no bank was willing to give him $175 million, suddenly this SPAC gets voted on to go public with his Truth Social platform. And so with the SPAC, the way it works, the dynamics of it, they go out with this par value of $10 per share. And with that $10 per share, basically an agreement that when the consumers buy that $10 per share, they're agreeing that those funds that get pooled up and raised around it, the sponsors of the SPAC, the CEOs, they even have CEOs within the SPAC, which is absurd, is basically going to go out and find an acquisition target. And so the reason that a lot of celebrities came in and said, hey, listen, I'm going to have a SPAC in the first place was because they were like, I've got the best access to deals. I've got the best access to any venture capital. Like people would count it lucky to have X, Y, and Z insert celebrity here buying into it.
Where the heck do these initial backers and initial people that are essentially buying massive pieces before it even goes out to the market coming from?
I mean, it's retail investors. So the way that it works, right, is they do this underwriting, they file the S1, and keep in mind, in the SPAC heyday, there weren't a lot of accounting measurements around it. Even though SPACs have been around for a while, there were not a lot of accounting measurements. And so you would just file a SPAC, hope to God it went through, and then go out and just raise a bunch of funds. And so, for instance, like Chamath, I can't say that last name. Chamath, he had actually filed for SPAC A through Z. It was ridiculous. Yeah, like it was Social Capital A, Social Capital B, all the way through Z. Yeah. And so he actually made like 600 mil off of SPAC. And so the way that it works is they just pay the filing fee. They get the stock at a 0.0001 per stock. They own 100% of the entity, and then when they go out to sell it, they sell it at $10 per share, liquidating part of it, but at the same time holding for 6 months post the merger. Now the mergers, because it was an M&A environment back then, were happening like gangbusters. And so you take public these dog shit companies that had no basis going public. I mean, Bird being one of them. SoFi actually did go public.
No fundamentals, right?
No fundamentals. Yeah.
No profit. What is going on?
Just absolutely ludicrous. And basically, there were a bunch of times where we would be in the middle of filing for an IPO for a company. Yeah. And they'd be like, oh, I want to be valued at 40 times revenue. And we're like, the market says you're at 7. And they'd be like, hold that. Went out, got a SPAC sponsor that would do them at 40 times revenue, and we wouldn't hear from them again. That's it. So it's just, SPACs in general, they cause this ridiculous wave, and it's like kind of a gambling mechanism that people would buy into it. Right. And so with this Truth Social from SPAC, he took it public, he got it valued at that $8 billion because his consumers came in and basically used it as a way to support it.
Right, that's what it was.
Yeah, and then he got leverage. Yeah, and then he got leverage against that to basically go back and pay the 175 mil. So long story short, the Truth Social from SPAC was probably one of the most egregious things that happened in public markets this year. $8 billion valuation on $5 million on the past 2-year revenue. And it was strictly because of the dynamics of the gambling market and also the fact that they're backing the sponsor, Trump in this case. So I'm not swiping left.
Yeah, let's swipe left on that one.
Yeah, so that was
probably not a great value.
After spending a lot of dark days in S1s for SPACs, I know full well how dark it can be. All right, the teenagers in the stock market.
All right,
this is a pretty fun one. So obviously, just when you thought the next generation couldn't get more fucked up. Yeah. I'm just kidding. Teenagers. So Fidelity just put out a report that a quarter of all teens throughout the U.S., 13 through 17, are investing in the stock market in some form or fashion. Okay.
Most likely.
Probably, yeah. Or any one of the other million apps that are now coming out tailored for that generation. Right. And so this, I mean,
interesting that that's outside of 401ks, right?
Outside of it, yeah. And so if you think about what's being said about the stock market today, it's just a casino. It's a lottery. You can't control anything. As we saw with the Trump Social, it could be an $8 billion valuation with $5 million of revenues. And because people are willing, it's a greater school theory. People are willing to pay more for it. And so as a result of it, just as long as you're not the last one on the merry-go-round, so to speak, you're good to go. Right. And so I think it's overall net positive to get teenagers involved in the stock market early. That being said, they should do it with a little bit of like guidance and learn a little bit more, because I do think that it's pretty interesting to basically have this hands-on learning in a stock market and learning what's going on. Granted, today, trying to put rash and reason to what's going on in the stock market is just ruled by randomness theory. Just everyone's attributing to this, that, or the other. But at the end of the day, it's a bull market, so it's going up. And so what causes that 20% swing? Who knows? At the end of the day.
Speculation.
Sheerly speculation. And so with that, I think it's great that they're doing financial literacy. I wish they would do it in more of an avenue like Mogul, where they could invest in real estate and actually see the increase in value, see the cash flow coming into their account, realize the tax benefits. Because if you understand residential real estate, you understand the way this country works. It is sounds like an egregious claim. It's not.
Not true.
It's if you understand what goes into that, you're like, oh shit, that's what a mortgage is. Exactly. That's what buying real estate is. That's what the American dream is. Like,
right, you really start to connect the dots on how everything works in the economy. You know, when it comes to like interest rates, when it comes to capital, when it comes to your relative return on capital that you're looking to invest in other avenues.
It's strictly it's going behind the scenes. It's going into the matrix. And so, I mean, I talked to you about it. Like it felt like the first. To be honest, I've never seen the Matrix.
Oh Jesus!
But it's true. It's like teenagers investing in the stock market, net positive. I do think, because they'll get the early experiences. They'll start to actually go towards more sound investments, learning about it. It's the same way that if you invest in real estate, you understand how the markets work. If you invest in the stock market, you might not understand how the markets work. You're going to understand a lot more than if you have
experience.
When did you start investing?
My family kind of put me start investing pretty early.
Yeah.
They would help me with my savings accounts and do a sponsored account with them. What is the minimum age for an account? You got maybe your parents to co-name an account with you, right?
I think you can do it whenever.
Whatever.
Yeah.
I remember getting my first paper checkbook when I was younger. Right? I don't use checks anymore. But I remember getting my first checkbook. It would have, that's had my name on here. So I was very fortunate to have drivers helping me understand, what investing was, what compounding was, and increasing your money to beat inflation. We always talk about. I'm sure you do the same thing. Your family. I'm sure it's a very good experience, right?
I mean, I got exposure to the entrepreneurial spirit very early. So I was very fortunate. I mean, first time my dad taught me about supply and demand was at a Jabba Chamberlain signing event. And we had bought 20, it was when the Jabba rules was coming out. He was the biggest pitcher on the Yankees, and he was doing a local bank signing autograph, like meet and greet type thing. And so my dad said, "Oh, it'd be great. Like, I'll take you to go." I was like 7 or 8 at that time. My dad said, "Let's buy wholesale Jabba Chamberlain rookie cards," which, keep in mind, no one had. And we bought it, I think, like $30 for 30, like a buck a thing. And for his rookie cards. But the thing is, they only sold them in bulk because they're like, "We're not going to charge you $1." And that's what they were worth. But we went to it. We showed up late, or we showed up at the time. People had been camped out since 5 a.m. We showed up at 2 p.m. Obviously, I wasn't getting it. My dad said, "I think I can teach you something here." And so I went around and sold every last one of those cards, marking them up. I think the last one I sold was for $80 to $90.
Nice. On a $1 basis.
Yeah, well, because you pit 2 kids against each other. You're like, "Hey, his dad said he'd pay $100." So I asked, "This is a great meal here, right?" Just like early, Jesus. And so it all started out there, and it's been back ever since. Reading a ton of books on the Random Walk Down Wall Street, Intelligent Investor, other business books that keep in mind, like, also were kind of psychoanalytical type thing, like Freakonomics, all that. So definitely would recommend checking those out. You invest in the stock market, I'm gonna swipe right.
I'm gonna swipe right. One thing I'll say on that, the beautiful, or beautiful, but also sometimes scary that we've seen in the past. But more importantly, sought after part of public equities investing is obviously liquidity. Things like real estate have never been liquid in the past. We're kind of changing that, right? I mean, what we're doing is one of our biggest goals is to kind of make real estate not only one of the safest and best investments for you, but also liquid investment, right? That's one of the things that we're working on. One of the cool parts of what the Mogul platform will. And I think one of the greatest things is that our values, right, of our shares of that you're purchasing isn't all that speculation, right? If you and I wanted to dump all of our shares today, it's not like that would at all affect the price you can buy because it's tied specifically to the values of the real estate, right? It's tied to real world assets that are actually trading in, that are actually being valued on a three approach method, right? Be a tax data. That's so key. I mean, one of the main things that you said, and you always say to me, is that in the public markets, there's so much essentially artificial spreading that happens because of public speculation booms from us that really hurt the economy, right? Like, what if we could educate people and have a lot of those speculators onto a platform where you can really invest in something that's value?
That's Mogul.
And that's our Mogul was
So check out mogul.club, www.mogul.club. Invest as little as $250. Set it aside. Test it out, honestly, because I mean, I use it and you use it as a savings account. We're putting our own funds in there. I mean, these properties are ridiculous. And even if you don't know if you want to do real estate, but you've heard it's a great investment and you believe in trying it out, try it out. Do it $250. If you hate it, by the end of the year, we'll have a secondary exchange up and you can sell out. Income the entire time. So swipe right on stock market. Electric vehicles.
All right. A little bit of background. So, having been a driver myself, having been we did get some. I will say honestly, it's been great. I know we can do a lot of stuff like hurt sell off, right? Which wasn't as great signaling for you. It's cooler weather. Some of the exclusive aspects of it when it comes to like parts, like tires can be when it comes to some EVs, obviously charging.
Why tires?
So the Tesla tires, you actually cannot buy them at third-party retailers or sellers. You have to specifically go through Tesla for tire changes. So,
wait, why?
Because they want to go to the market. That's my opinion. But second of all, because it's like a very specific profile and fit. Like a lot of the wheels on some of the Teslas are like more convex. Concave, concave, right?
Yeah.
So like, yeah, the tire shape profile is like really unique, just each wheel. And I know that they produce tires for each subset of each model separately. So, like, for example, when we were flying to, I forget where somewhere, flying out of Philly, it's like a direct flight. Go to Philly, you remember this?
Yeah,
and we got a flat tire, like as we were arriving in the city, luckily it wasn't on the way. And we had to call the Tesla specific like help center. And honestly, they were great. I will say, like, to all of Tesla's ability and everything they're doing, it was really, really streamlined, and they were able to get someone out there to tow away the car, we would pick it up when we got back from the trip. But regardless, couldn't go to any shops or repair centers in the area, and had to specifically go to this concierge service. So why am I talking about it? One of the things that we're kind of talking about right now is obviously there's a lot happening right now. There's competitors out there like BYD that are aiming to outpace Tesla. A lot happening in the market. They've been kind of finishing up and finished with the Gigafactory in Austin, which was a huge driver of a lot of the process that we talked about out of the pandemic and through the Austin boom. Created, they got like 100,000 external jobs and then whatever, 20,000 internal jobs. Yeah, and billions of dollars investment there, billions of dollars, and also tax payments and also subsidies, gosh, that were going into that development as well. So I think huge thing right now is talking about the market. Hertz did a massive sell because they were having issues with the fact that no one wanted to rent these, first of all. They were having issues in the cold, right, maintaining like a lot of their functionality, and maintenance is also Hertz does have. In internal maintenance systems, which I read a little bit more about and learned about myself, where they can actually take in their fleet through third-party partners. And I'm just thinking about the supply chain that comes from EV manufacturers like Tesla, like the other big ones out there, like Rivian, and there's
Ford now.
Polestar,
Wait, which is the one that went? Was it Lucid that went?
Yeah, Lucid.
Did they fold? Who's the one that was Polestar? The one that folded?
I don't. I still see a lot of Polestar. Maybe.
One of the companies folded. I don't fucking know. It's SPAC. That was a SPAC. That was a SPAC. Yeah, one of the companies was a SPAC and was valued at $7 billion with 0 sales. Anyway,
there you go. That explains it. That explains it. So anyway, yeah, I mean, we just talked really like about really EVs. Obviously, it benefits the planet in terms of fuel consumption. So the production, this is fuel sensitive, right? We can solve the fuels. So yeah, I mean, just to give some background, we can talk about some impacts to the stuff that's been going on. Obviously, a lot of buy factories, Tesla, buy other major producers that are now offices, factories all around the U.S. and continuing to increase expansion, especially domestic expansion. I think it's definitely going to be, I would argue, net benefit for the economy and net benefit for the U.S. But yeah, I'm curious to hear your thoughts.
Net benefit for the economy, I do think so. I mean, just the fact that there's like an entirely new set of cars that a lot of people are going to be buying into, coupled with the semiconductors that are being made in Texas, which we talked about earlier. I do think there's a net benefit there. What I will say, I don't think I personally would buy one just yet because the mileage isn't there. The battery problems that we had discussed aren't there yet. The infrastructure is getting there. It's not fully there yet. I do think there has to be a lot that needs to come before I would even purchase one, but at the same time, it's a step in the right direction.
Right.
I don't know necessarily if people that buy Teslas, and maybe weigh in on this, people that buy Teslas buy it because it is so radically different than any other car, as well as the technology that goes into it, the software update that can just happen overnight, versus like the EV component.
Right.
Because I mean, if you think about it being the EV component in particular, Priuses have been around for a while.
Right. Pre-I.
Yeah. But who the fuck is buying a Pre-I? Like, with Teslas out in the market today. Well, no, come on.
Yeah, you're right.
Like, are you kidding me?
They did release the new one, that new model.
New model of what? The Prius?
Did you see it? It looks like they tried to make it more sporty, and the commercial was like Prius like zooming around the city, like racing a Tesla and stuff.
What? Not your grandfather's Prius? Like, what is that?
No, it's pretty funny. Like, I want to show you the commercial for this. It's actually like pretty funny because they make it look super sporty. Like that's the rebrand. It's like they've been like the kind of like safe, grandma car. Like, and now they're trying to rebrand the like sporty model. I think it's really funny. But
well, I definitely will, but I do think Tesla. I think the EVs that they did. I mean, that's just like tremendous what they brought to the industry. They made it a cool car, and rebranding it as rebranding green ESG as a cool thing is like. I mean, it's happened a lot over the last little bit, and it's lost a lot of people a lot of money. But at the same time, it's pretty interesting. I would swipe right.
Yeah, I'd swipe right.
Yeah. I mean, this picture too.
What about his quickly? Just really, really quickly. What about the whole setting for kind of taking out those conversations? That was a big thing.
Oh my god! If I had, I don't think we have enough time.
Yeah,
the must shit. Like, it's just so fun. Like, so I went into investment banking the year that Tesla was just starting to really hit its stride, like 2019, around then, whenever it was, when I was heading to IB. I remember
that's when they made the really big announcement too about like the factory. Right?
Goals. Yeah. And so but the thing is, Musk was starting to actually come down on his predictions a little bit. And so Musk was saying, all right, like, I said 1 million by 2020. Like, I think we're probably going to hit like 300,000. Realistically, we're going to miss it, all this stuff.
Right.
Then SpaceX next week has a rocket launch that goes tremendously successful. And this man,
awesome.
The man holds a presser and it's like, fuck it, million by next year, and you can put my word on it.
And my comp on it.
Yeah, and my comp on it, and then the comp that that resulted of it, the biggest comp payday ever that is now being clawed back, obviously. Kudos to him. He set aggressive targets.
Yeah.
I don't know if he sandbagged and played that early, but like he set aggressive targets, he hit them all, and that's why he got paid the comp. But at the same time, now he's clawed back. So, oh yeah.
Do you remember that? Like, just like back in California, right? Like, the first Model S and the Model X came out, and like the Model S, cool. And then it's like I only see like one of these maybe like 100 or 200 cars, and then literally all of a sudden you start to see them everywhere, and it's like holy shit, like this is really taking over. Like the production is insane. Like this is actually happening. It's one of those things that like you hear about back in the day, and you're like, that person probably won't achieve like. Like Taylor Swift or something back in the day, like way back in the day.
Oh yeah, teardrops on our guitar. Yeah.
No one would expect like these like moguls like popping up out of nowhere.
Oh yeah.
And then all of a sudden it's like the next day, holy shit, they keep this wild because they're just behind the scenes, like crushing it without any need for public approval. And then all of a sudden it's like, here I am, big unveiling, like I've done it.
And not to mention, I think one of the funny things that happened back in the, like when I first realized that Tesla was hitting it hard, I was out to dinner with Kayla, my significant other. I was out to dinner with her, and I was getting overwhelmed by the amount of Teslas I was seeing.
Yeah,
it's like when you see a million golden retrievers and you have to point them all out to people.
Yeah.
And so I see like multiple Teslas come by. I'm like, oh! And I'm like, Tesla! Yeah, just like Tesla! You see the Tesla? And like freak out. And then finally, like it gets to the end of the dinner, and I think I see my sixth one at the time. I was like, "You see that? You see that Tesla?"
It's crazy.
And Kelly goes like, "Yes, Alex, I see the Tesla." And I go, "Yeah." And then she left me. But anyway, that's an electric vehicle story. Apple robots. Oh,
all right.
oh, boy. Apple Vision to Apple robots. I mean, it's ridiculous. I mean, so for those of you that aren't tuned to what Tim Cook just announced the other day, they are going into home robots. What that looks like, I don't know if it's this, but I hope it is this, a big ass Apple. I wouldn't be surprised. And it has a different USB cord. And like it's but like you have to get the USB-D instead of the C. But so Apple, they did a lot of smart vehicles. They had this whole division that was devoted entirely to building out smart vehicles that could drive autonomous vehicles, EV, and it would connect ridiculously to your already growing Apple products.
Right.
And so with that, they had this vehicle division devoted to it. Now, then they decided, all right, we're going to sprint. And this is at the same time that obviously the Vision Pro, it's been kind of a lackluster reveal there. Vision Pro, a lot of people actually were going back to return it within the 14-day window just to try it out. Yeah, bunch of sales, and then they just go back and return it. And so that obviously wasn't great, but Apple now is saying that their next iteration is the Apple robot. And I mean, it's absolutely ridiculous to think that, one, if they hit it, they could hit it big. This is like a moonshot.
Right.
This is like, I mean, this is taking the innovator's dilemma and just being like, fuck it, we're betting the company on it. Right. I don't think they're betting the company on it, but at the same time, can you imagine implementing these that we have? The amount of things that it could do, it could sweep up, it could clean up, it could look after it, it could be a sentry guard, so to speak. I mean,
iRobot.
Yeah, it's iRobot.
It's iRobot.
And mixed with the AI that like they're gonna probably partner up with someone else, they could have AI effort, I believe so. I mean, it's kind of ridiculous, but I'm tuned to swipe right on this.
I don't know, from everything Will Smith taught us in the movie, it could be scary, but yeah, obviously, like, incredible net benefits. Technology can only help your term, right? And, just incredible this where, like, you need to use it and it will stuff.
Yeah.
It's really crazy. Like, it's like you're saying, like, the vision might not even necessarily be, like, the best thing ever. But I don't remember any marketing going into it. Like, I don't remember really seeing it anywhere. And
not
like, actually the launch, right?
Yeah.
I'm sure, like, I don't actually remember it, but sure it was just absolutely weird.
They sold it.
Yeah.
It was ridiculous. So net positive, I'd sweat it, maybe, right?
I guess so. Do you fear killer robots?
Not really. I mean, I feel like it's just they're gonna help, more than they'll hurt. But so at the end of the day, I mean, that's kind of all we had. That was the last.
That's fun.
That was the last one. That was good. But tune again next week, same time, 1 p.m. Eastern on next Friday. For those of you that have in the past, thank you. Subscribe, check out our properties. They're killing it. 18% IRR average across the portfolio. Absolutely ridiculous. Check it out at www.mogul.club. Anything else you want to say?
No, happy Friday. Enjoy the weekend.